Yo, what's going on, guys? Welcome to today's topic, guys. What's going on? What's going on? I'm your host, Donnell Lovely, and I am here in the lab working for you, guys. So, again, today's topic, guys, is when to switch from a LLC to an S-corp status, okay? LLC to S-corp. And the reason why we're coming on here today talking about this is because March 15th is the tax deadline for either filing extensions or filing the tax return for partnerships and S corporations, right? And some of the differences being that you have some more advantages when you're separating your business into those entities. And so I want to kind of talk about that a little bit, but I want to give a little bit of background about myself and actually telling people how I can help you. Okay. And so a little bit of background about me, guys. I've been in the industry, in the tax and financial service industry for about 8 years. I've helped over 300 small business owners reduce their tax liability and also helped over 1,000 refund people get more than $20 million in refunds over the last 8 years. I actually focus on now doing strategic partnerships with small business owners that actually allow them to utilize tax-free wealth strategies to be able to set up retirements for themselves, protect their assets for their jobs, also being able to position themselves to create their nest egg and not lose money. Okay, and so I help you protect your money and I help you keep your money by those two factors. All right. And so in today, I want to actually go over some of the concepts of the LLC S corp status, right? And so one of the things is the common differences when you're talking about going from an LLC to an S corp is that an individual with an LLC, in the eyes of the IRS, is considered disregarded based on the membership of that organization. So if it's a single member LLC, right, then you disregard it to a sole prop status, meaning that your LLC documents are filed on Form Schedule C, right? When you're filing on Form Schedule C, it comes on your personal tax return. All those are highly audited. All right, higher likely audited on a Schedule C than you do on an S corporation. Okay, now, if you're a member or a member LLC, that entity normally now is disregarded to partnership, and so now because you have an LLC, a two-member LLC, you are considered a partnership on the IRS status, right? That means that you have to file Form 1065 and the issue K1s, and those tax returns are due March 15th as well, and then your personal returns will be due April 15th. So these are some of the things. Now, why is that important? It's important because if you don't file these returns when they're due, you will have a penalty, right? You will have a penalty up to $250 per person per month that you don't file those returns. I had a client last year that didn't know that they knew they were a partnership. They didn't realize that they didn't file their returns until almost 6 months later. They filed the extension and then they got a $2,000 bill after they filed their tax return. Why? Because they had a failure to file penalty. Okay, and so if you are a LLC, a S corporation, or a multi-member LLC, or if you are a partnership, you want to make sure that you understand what your dates are, what your filing requirements are, so that you won't be in these situations of predicament where you have a failure to file penalty. Another thing, from an LLC perspective, right, you are required to file quarterly estimated tax returns. If you not file those quarterly estimated tax returns at the end of the year, you will be hit with a failure to file penalty as well. Each quarter that you file, there are 4 quarters in which you should be filing, right? January, April, June, and September. These filing requirements must, even if it's a zero file, you must file. Because if you don't, again, you're going to hit with a failure to file penalty. These penalties add up because not only will they they call, but they may consider having interest added to them as well. So that you'll be able to avoid that kind of income loss, right? And so when would you think there would be a good time to switch over down there? I said, well, it depends, right? So it depends on what is your net income. The rule of thumb for us is if you're making over $40,000 net income, then you might consider going over to an S-corp status. Why? It avoids the 15% self-employment tax, and that's one of the things that the LLC you're going to have to pay because it's going to begin. It's on your Schedule C. You're going to have to pay a self-employment tax, and that's about 15%. But that's called Medicaid and Social Security. If you don't know what self-employment taxes are, it's Medicaid and Social Security. And so you're going to have to pay that regardless on top of whatever your tax liability is, on top of whatever your penalty is, on top of your interest is. So you think those fees and things like that can add up, right? It can add up pretty quickly. So I like to tell people to get ahead early and make sure that you're putting yourself in a position to you get to keep more of your money. And now you can use the tax codes, tax strategies to allow the government to do what they want to do anyway, which is help small business owners by giving you credits and deductions for things that you're already doing, right? And so those are some of the different tactics and strategies that you can be able to use. I've had help people in a lot of different industries, mostly in the real estate industry. You have different types of ways you can reduce your tax liabilities. You're not in distribution. You're actually, you're taking tax income, and you're reinvesting it and making, you gain all these different types of people. You can get credit, you get breaks, moving money and using equity. Money and creating income, you're doing it in the last way. And so these are some just small strategies that I believe that you to reduce that tax liability. Good. Also, creating yourself some kind of retirement account, right? That's the number one way that you can do to get that. So now the S-corp, you're able to pay yourself a salary, and now you can contribute to whatever type of 401k, 403b, things like that you want to, right? Also, you can match your own company based on whatever you want to do, right? So, and if you notice in some companies that you may work for, they can match up, they normally match 100% maybe for the first, 5% or something like that. Well, this is your company. You can say, well, but you got, you can match 200% for the first, but you got to do it. That's some of the tax advantages that you can do to start saving money and being able to save for retirement. Now, retirement vehicles, I'm not going to go into life stuff. I can definitely talk to you on different maybe from that. But it's just being able to understand how to do money and how to take tax. Because again, if you don't put it up, move it away or put it in different vehicles, IRS come and say I need it. So when you come at the end of the year and you had a $20,000 tax bill, you're gonna look at somebody like me and say, "What I need to do?" Why? Because you did not take the time to you have to pay it. So now you got to pay it. And now because you got to pay it, maybe you'll listen when you pay attention. And I noticed that a lot of people don't do that. They don't pay attention until they get to pay. And so either you can pay or you can pay what they're gonna get. And you don't, because you didn't do your quarterly taxes, you don't have your documents in order, your books are a mess, and you weren't able to take none mingle funds. You just making your money, you don't get, especially a lot of small business owners and entrepreneurs, they just be winging it, man. And when it hit them, it might hit them 1 year, 2 years, 3 years. I'm just saying, like I said, Terrence Howard had a $20 million tax bill or $2 million tax bill. And, after 5 years, right? Steve Harvey had issues with the taxes. And so it don't come. They make it slow, but the IRS gonna come. So what I'm trying to tell you guys right now is to put yourself in a position to don't have that work, don't have that knock at the door, or that letter coming to you saying you owe $250,000 for last 5 year tax returns and what you going to do. So strategies, with that, whether it's a tax strategist, a CPA, whatever, and get somebody on your team to make sure so that you can actually take those credits and deduction that. All right. And so if you concerns, if you need some help with understanding what moving from an LLC to an S-corp, I have some time on my calendar. You see a ticket right there. You can book that link to be able to get started with me as a client. I am taking some clients for the S-corps and make sure we can get those. Right now, at this point, we're going to be able to do an extension because it's a lot and people don't have their documents in order and we need to get an extension done. So again, you want to make sure that you have, if you got an S-corp or a partnership, go ahead and file those extensions, or you go ahead and, if you're ready to file, go ahead and file those returns so that you won't have those penalties issued to you. Yeah, it's going to be a pay file penalty up to $250 per person per month that you don't do it. Right now, if you have an issue, then you don't get that penalty. But again, you want to make sure you file that. Also, you make sure you want to file your quarterly returns. The 4 dates for the quarterly return is April 15th, June 15th, December, and January. Okay, those are for the 4 quarters that you'll also get penalized for if you do not follow. All right. Those are the things that I wanted to talk about. Got questions? Reach out. Need some strategies? Reach out. Shoot me a DM and I'll be able to get back with you. All right. So, guys, this live is going to, if you want to replay, just hold hit replay. Got any questions? Hit questions. And let's see. I can't see anybody if you got questions or anything. I can't see. So that's what I have, and that's basically what it's gonna be. So I'll talk to you guys soon, and we get together. Peace.